Welcome back to the Daily Stock Drop, your number one spot for breaking down the market moves that actually matter. If you've been watching the AI sector, you know it's a battlefield out there. But today, we are zooming in on a company that just made a massive power move to clean up its house and get ready for the big leagues. We are talking about BigBear.ai. They just dropped a bombshell announcement that changes their entire financial picture overnight. If you're holding BBAI or just watching the AI space, you need to hear this. But before we dive into the numbers, let's get the housekeeping out of the way. I am not a financial advisor. I'm just a guy on the internet who loves the markets. Everything we talk about today is for entertainment and educational purposes only. Always do your own research before pressing that buy or sell button. Alright, let's dive in. BigBear.ai just announced the full conversion of their 6% Convertible Senior Secured Notes that were due in 2029. Now, if that sounds like a bunch of Wall Street word salad, let me break it down for you. Essentially, the company had about $125 million worth of debt sitting on their books. Instead of paying that back with cold, hard cash, which, let's be honest, growing AI companies need to hold on to, they have converted that debt into shares of common stock. So, why should you care? Why is this actually good news for investors? First off, the debt burden is gone. Poof. Vanished. Before this move, BigBear.ai had about $142 million in note-related debt. After this transaction, they are down to just $17 million. That is a massive reduction. They basically wiped out the vast majority of their debt in one stroke without spending a dime of their actual cash reserves. For an investor, this signals two very important things. Number one, safety. A company with less debt is simply less risky. They don't have that $125 million hanging over their head anymore. And more importantly, they stop paying interest on that money. That means more cash stays in the company to fuel growth, hire engineers, and build better AI products. Number two, conviction. This conversion usually implies that the debt holders were willing to take stock instead of cash. They are betting that the shares are going to be worth more in the long run than the debt was. That is a bullish sign. The bottom line? BigBear.ai just significantly strengthened their balance sheet. They are leaner, they have less liability, and they are now positioned to run faster without that heavy debt backpack weighing them down. If you're bullish on AI solutions for national security and defense, this financial cleanup is exactly what you want to see to ensure the company has the runway to execute its vision. That is the drop for today, folks. What do you think about BigBear's move? Smart play, or do you worry about the dilution? Let me know in the comments below. Don't forget to smash that like button and subscribe so you never miss a beat. I'll catch you in the next one.